Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'm just going to do a brief overview of the market, given that it is, I believe, Sunday morning, right? Yeah, actually Sunday morning. And, so I hope you guys are enjoying your weekend. But let's just jump into it. You can see that we do have a lot of green on the board. We did have a little bit of a pullback yesterday, but a lot of it has recovered. Additionally, we do see just a basic profit taking on some of these coins like Arweave that had just pumped like crazy. We see other coins like Ape, Ethereum Classic, and FTM just continuing to pump. So let's just move forward from the old crypto bubbles. Of course, next week we do have many things on schedule. But the most important, I just want to remind you, is going to be Wednesday, July 27th, which is the Fed Chair Jerome Powell's press conference. Of course, the Fed will be making a decision about their rates, and so you don't want to miss that. Set your clock for 2:30 p.m. on Wednesday, July 27th. Of course, I'll continue to remind of this. It's extremely important, and if you feel like the market is kind of waiting for things, and some parts of the market are kind of front running the market, while other parts of the market are holding back. It's probably because, the different sectors are waiting for this news from the Fed on Wednesday, July 27th, and they're just not going to do anything really until they see that decision. Now, of course, it can take time for the market to actually, calculate, what the pricing of the market should be once they do get a decision. So just like the data, whenever we get fresh data on inflation and other numbers, the market doesn't always react how you think right away. So just be on your toes, okay? Like that's the key point. Like we're just on our toes for this information to find out what the Fed's going to do and to see how the market is going to react to it. Headed over to the charts, you can see the pullback that Bitcoin has had. Of course, we did top out there at 24,250, approximately where I said we would at 24,000. And then we had a nice 10% pullback. Now, what do I say here? Like, you don't want to be chasing pumps, but if you get a pullback that's over 10%, that can be a chance to buy in. Of course, I would prefer 15 to 20% before, I was going to, buy back into a position if I had taken profit. But that's just me personally. You guys can decide on whatever values you guys want to use. But in general, you don't want to be chasing every, 2 or 3% up and down, or even every 5%. You know, it may seem like a natural thing to do, but eventually you're just going to frazzle yourself out. You're going to get very stressed out from the market. And so, waiting for these, these big moves of like 25% and just taking your profit at key resistances. We took profit at 3 points, and then we had a fourth point set up, which was the stretch goal at 24,000. And we did end up hitting that stretch goal, right? So we actually got all four profit points based upon our entry back here, which was approximately $18,800, and then another entry around $19,500-ish dollars. And then, of course, we've just been riding this market and taking profit at those key points. We weren't able to hit the $24,000 profit point here, but we did eventually get to it. So again, like if you do see a pullback that's pretty significant, then it could be a good opportunity to buy back some of your position in case there's a larger pump, right? But you'll have to determine that for yourself. Just my 2 cents. Guys, look what happened. We actually got the pullback that I predicted and that was making me kind of a nervous Nelly the other day. If you guys recall, uh, what is this? I've been actually chasing this. Let's see. Thought I had that. There was kind of a head and shoulders structure on the charts, and it made me very nervous. One day I was just saying, guys, I think, I'm going to get out of the market here. We're getting up, we're getting close to this neckline. Of course, we were at, some point of resistance. I forget where exactly, but oh yeah, I think we had broken down here and then we pumped back up and we were at the neckline or something like that. And I said I was going to get out because there was this potential measured move, right, that could drop us all the way down, right, all the way down to 21,900, basically 22,000. And I told you guys, like, these things can sometimes play out over several days. The market doesn't tend to go in a straight line. And so what do we see? The measured move for the head and shoulders has played out. And that's just, how these things tend to work. So, there you have it. That kind of risk management and understanding that we were getting a bit toppy, we were forming this kind of bearish formation, and then even though we actually did catch support, and I was pointing out we did catch support, so there was the potential to go long in some of those positions, we would have to be on lower high. Right, we would have to be on lower high watch because if we did start getting lower highs, then we could also be potentially in a kind of downtrend. And if we were in a downtrend, we would want to watch to see if we were going to break down from our little local uptrend here. And when we did start to break down from there, you can see my kind of exit box, right? When we did start to break down from there, I did say, I wouldn't feel too bad if we just came to this level, and we did reach that level, and we did try to pump, but unfortunately, it was underneath our trend to the upside. And while we put in a noble attempt to try to hold on to that, we did break down. And so that would have been your cue that perhaps this formation was playing out and that the chart was giving way to the bears with the bulls having done their best, right? And, this isn't necessarily bearish overall because you might consider that this is some type of, bull flag, right? Like this could be a bull flag. Why not? And so maybe we're going to get a pump to 26,000 or something like that, right? We could get a pretty good pump if this ends up being a bull flag, but we would want to see it break out of this downtrend and maybe even retest that top. It's okay if it just comes down a little bit more and then start to pop off. So, guys, we're just really in the middle of this formation. We're not at support. Right, you can see our support. We're not at support and we're not at resistance on the Bitcoin chart. And so all those coins related to Bitcoin, they're not really going to be, decisively, positioned to either go long or short. In my opinion, I'd rather wait to see if we come back down to support and like double bottom or make a higher low or something, or I'd rather see us like break out of this formation and maybe put in, a higher low there, or to see if we just end up breaking down or whatnot, right? But I haven't updated this since last night. It is approximately 5 in the morning over here. But, if we do recover this $23,000 area, I'm going to be a little bit more bullish. That does actually correspond to the breakout of this bull flag if it ends up being a bull flag. Um, I guess we could stretch it down a little bit like this, but if we do end up breaking on top here, then, and recapturing this area, then as we push, we're going to start looking pretty bullish. And, the daily Stoke will cross up if we recover 23,800. So, let's just call it 24,000. If we recover 24,000, that's going to be the cue that probably we're going to get another push up. And so you kind of want to be, in maybe a bullish posture if you're in that area. Not financial advice, of course, I am just talking to myself, but you understand that just trying to go over my thoughts here. Of course, if we do continue to break down, you can see that all of these different levels that we lose, we just get a little bit weaker and a little bit weaker. but you know, our RSI will continue to rise as long as we're above 22,500. And you know, we should keep our daily momentum as long as we're above 22,250-ish. And we probably don't want to be breaking below 22,000. If we're breaking below 22,000, then we've basically lost our momentum. We've also lost our 2-day Stokes. And so, you know, some moves are quite powerful. Like this Head and Shoulders was just a 45 minute. This was basically printed on the 45-minute chart, basically the 1 hour chart. Okay, so the 1 hour chart is pretty powerful, but you know, it doesn't last too long. You kind of like go through it and then you move on, right? Maybe it could take a little while to play out, but you pretty much just go through it. And you know, it may even be technically invalidated here, but the market may go through the motions, just in a little delayed effect depending on, you know, what kind of a battle's going on in the charts. But when you start getting into those 4 hours, you know, the daily and then the 2-day moves, these things can actually take quite a bit of time, several days to play out. You know, the daily can actually take weeks to play out, and people don't realize that daily setups can often take like a week to play out, and then they can lead to like 2-day formations, which then take, you know, weeks to play out. And those are the really big moves. So the reason why I have the you know, the 2-day Stoke marked out of where we would break down, where we would cross down on it, is because as long as we're above that line, you know, we do have the potential to be, you know, turned up to the upside on those bigger formations, even if, you know, on the hourly or whatever, we're, you know, we're having pullbacks. You know, the key point here is that this is our bottom line, right? This is pretty much our bottom line. And then of course the you know, the weeklies, the MAs and the EMAs that I have on the chart here, marked out in the in red for the 9, the 200 MA here in orange, the 5 EMA in pink here. Those, of course, are the weeklies so that we can keep an eye on which levels we're at. You know, if we lose the 5 weekly, you know, often we're just not in a very good position for the long run. And capturing the 9 or the 10 EMA on the weekly actually is very bullish for Bitcoin's chart. So that's kind of a range that I like to use to see where we are. And if we get under that 5 weekly, then I'm going to feel pretty bad about the market. If we get above that, you know, basically the 10 EMA weekly, then I'm going to feel pretty good about the market. Until then, we're just kind of ranging, maybe trying to make a squeeze play to the upside or the downside. You know, you have to really examine the EMAs to take a look at, to look for that. But on the whole, you know, I can get an idea of where we are. And that's just an explanation of the graphs, you know, that I have over here. Of course, MACD is a good measurement of momentum, and so I do put the 12-hour on there just so you can understand like where we kind of pick up some momentum, right? Let's see. Just moving forward, let's check out ETH, because ETH really is leading the market in terms of crypto. And I do believe that we did recapture our entire move. Yep, yep, quite bullishly actually. Look at that. That was a nice 9% pump on Ethereum since the 23rd, which was that just yesterday? That was yesterday, 9% in just one day, you know, on Ethereum. So this thing is going crazy, going 10% down, 10% up, down 10% down, 10% up. And of course, the fact that it's doing it, you know, up here is pretty bullish. I'm actually going to go ahead and put the daily EMA is on just so I can see what's going on here. Oh, wow, look at that. Look how super bullish this is. This thing is riding the 5. It's not even riding the 10, which is very bullish. It's riding the 5 up. So that is incredibly bullish. Just, yeah, really bullish Ethereum Guys, I mean, this thing's doing its job. Obviously, it had a pullback, but having a pullback, it doesn't mean that you're in any kind of trouble. Let's go ahead and just to turn those off really quick and go to perhaps a lower time frame just to see what happened. You guys remember this white midline that I had marked out here on Ethereum's chart? I did clean up this chart a little bit. I tried to connect, like this one because people always criticize me for my TA. I don't know what's with this industry, but people like to just criticize each other a lot. And I didn't feel super comfortable about this. I feel like using these wicks, like it just doesn't feel like that's the main thrust of what Ethereum's doing, and I prefer to go with some type of common sense rather than sticking with strict rules. So yeah, people can laugh at me. They can say, we see that you're not following rules. You're supposed to draw a trend line like this, right? But guys, for me, we have touch, 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 right? Touch, 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 right? And so if we do pump, I would expect us to get to this red line here. If I drew this yellow line like this, I mean, of course we have touch and touch, but it may never reach there, right? So is that really where I want to take my profit, or would I rather set my profit somewhere down here? And likewise, if I'm going to try to find support, right? Then I would like to find support where, hopefully the chart pumps off of, right? Where it kind of moves off of it. And so what I see is that we kind of like lost support here, but when we gained it, like you can see, we bullishly recovered it and then we pumped up, right? Same thing here. We lost it and then we bullishly recovered it and then we pumped up. And so in my mind, right, when we flipped this resistance into support, then we pumped up to the top of this channel. So right here, we had a bullish support, bullish support, bullish support, right? So I'm going to use this green line as my trend line. I'm not going to just strictly use some type of rules like this, right? Because what I'm going to end up with is this kind of crazy, broadening wedge on Ethereum. And, this thing is going to drive me nuts trying to figure out what it's doing. Okay. Like that is just a very weird formation. And yeah, maybe people like to make fun of it, but of what I'm doing. But I personally believe that there's no harm in cutting corners on this TA as long as there's a logical reason to be, applying certain principles of your own that make sense to you, and that becomes your style of trading. Now, maybe, those type of principles are codified in formal, TA somewhere, and I just don't know about it. But I'm getting tired of hearing like every YouTuber like criticizing other YouTubers for their TA. Every like a guru like constantly making fun of like people on Twitter and YouTube and but they're all the same. Right? They all make errors. They all you have their own style. Everybody has to find a style that works for themselves. And so, guys, like because a lot of us, are just continuous learners, right? Like we're not trying to pretend like we're gods, right? Like we're not trading gods or whatever. We're not the godfathers of, this or that coin. We're not, the whatever all these stupid shenanigans that go on in crypto Twitter and everything, that dumb stuff for kids, man, where you just have to feel like you're better than someone. We're just guys out here trying to learn, trying to improve our trading, and trying to find styles that work for us. And so, sometimes, guys, I am going to be breaking some rules that maybe you've learned somewhere, but take it with a pinch of salt, try to understand what I'm doing. And, if I see a clear midline like this, then I'm going to say that, look, I mean, this parallel channel makes a lot more sense than some type of broadening wedge. Okay, like this one makes a lot more sense, especially the hit down here. So this is the channel that I'm marking out. You guys can mark out whatever you want, but guys, sometimes I adjust to this stuff as well because it just bothers me if if I'm not doing it my way. And sometimes I try to do things that will, that will look good for, anyone who's watching or that conforms to rules that other people have taught me. But I'm gonna just have to think out of the box sometimes and do my own thing. But again, like here's Ethereum, and again, it's really bullish. We are in this just top of the zone here, right? Like this is where we want Bitcoin to be, like in this top area. You can see the difference between Bitcoin, right? Where it's not in this area up here. Like we really, we really want it to be up in this top area. We want to capture this area, but it's kind of dipping down versus Ethereum, which is just like already there and just like kind of chilling out, just kind of hanging out there. I mean, it literally could pop up at any time. I mean, it could also break down, and I'll show you how, but we are in that bullish zone, like very bullish. We're above that 9 weekly. We've got our, daily MACD. We've got our 2-day Stokes. Like it's basically in the zone right now. I mean, this is an incredibly bullish zone, and it's the most bullish area of it that it can be in. So, let's hope that this continues because, it could literally go to 2000, if it can break this overhead resistance, perhaps in this area. And guys, the reason why I was talking about, how to chart channels and things like that is just because this is the key point, right? We're looking at Ethereum. And so the question is, how high could it pop? Well, it has resistance in this area, right? I mean, like previous support can become resistance and things like that. So, there's this zone that's going to just slow it down, sort of like there's this zone right here that's slowing it down. Probably, yeah, these kind of wicks and stuff over here, just kind of slowing it down. And so it might make some chop for a while, or it might just push through. And then I would expect it to hit this diagonal where, we've got a bunch of touches here. And first of all, we've got like this diagonal, right? Where this one right here, like you can see, like there's just so much that's contained underneath this. And then this one is actually sitting on it as kind of a support, right? So this diagonal actually is really relevant. And if we could get to 1850, something like that, 1800 after breaching 1700, like maybe we would get hung up there for a little while, who knows? But the next one would probably be around 1950 to 2000, and then perhaps we could talk about getting above that weekly 21 if it's able to break through the weekly 21. But in my mind, the way that I'm drawing this trend line also has confluence with the weekly 21 because we might get deflected there and it might come back down to retest something. Now, speaking of that, we can see that we did actually break through this mid channel and we didn't break back under it. We're sitting on top of it. So one of the things that I was talking about before is that we were chopping around underneath it, or we're chopping around on top of that mid channel, right? Here we're underneath, here we're underneath, here we're over. And the fact that we're over is a good sign. So even if we chop down, if as long as we're chopping around on top of that midline, that mid channel, there's a good chance that if we do pump, we're going to pump to the upside as opposed to pumping to the downside. You see, when we start to chop below the mid channel, we could fall to the bottom very easily. Chopping below, we could fall to the bottom very easily. But the fact that we're chopping on top means that even if we have a pullback, we could pump. We could just pump to the top, right? We could just pump, right? Pump. And so these things can happen. So be prepared. There might be a pullback, but also this thing could just go, right? This thing could just go. Now, I think you got an idea of how to visualize Ethereum. And again, there's not much to say about its different levels. It is just very bullishly postured, right? But let's go ahead and take a look at Ethereum's CME chart. Now, this is something that I don't see anybody talking about, and I don't know why. I was talking to you guys about it, about a week ago or a few days ago, where I said like it partially filled when it rejected, and I didn't understand that. I just thought it's gonna go the rest of the way to 1650. There's no chance that you only partially fill a CME gap. And so it sure enough, we chopped around and we filled the rest of the CME gap, right? Which is this kind of a hole in the chart where you don't see any price action right there, right? These CME gaps tend to get filled. Now we also have one here, and we also have one below us. And that's why I'm so surprised that I don't hear anyone talking about Ethereum CME chart. Guys, like, have you ever heard anyone talking about Ethereum's CME chart? This is something that we need to be discussing. Why? Because look, Ethereum led the charge on this rally, and what could we have predicted? That it was going to fill its CME gap, right? That was in reach and it took it. And, guys may have been freaking out that, this move wasn't going to play out or whatever. But, the fact that we had captured 1/3 of that in the original pump, it was almost guaranteed that we would capture the other 2/3 of that CME gap, and now it's full. And so sometimes these CME gaps can be actually used as support and resistance. And so you do see us reflecting in this area. And that's just kind of the market parsing out the pricing, I guess. But just to be careful that we don't break under this line, approximately 1475, let's say. If we break under there, there's the potential that we're coming back down here and we could actually try to fill in this CME gap, which we opened up when we just shot up so fast that when the professional exchanges were closed, so that they could have dinner and sleep and see their families, or perhaps it was on a weekend, or perhaps on a holiday. That's how CME gaps get caused on the professional charts. The CME charts are the professional charts, which just have regular standard banking hours, right? And so, guys, like, don't be surprised if Ethereum has a pullback and then it really goes. Let's just say that we do have that crazy rally, right? Like, that would be a really nice entry point. Why do I say that? Because we also have support down here. And we have the CME gap, which I already mentioned often acts as support. And so that's kind of like a double support area if you think about it. And if we do start to get a bounce off of it, well, we've already proven we can move through this area, so we're probably going to go to try to kill another boss, and then we'll chop around there as we try to defeat the bosses in these regions, right? Guys, if you like my coverage of these CME charts and stuff, and it's a little bit special compared to, what other guys might be showing, and, I hope you're enjoying that. Please leave a like or a comment or join the Discord. The links, of course, in the description of the video. I don't really care too much about that stuff, but I do appreciate knowing that there are a couple people following this stuff with me, and I've just really enjoyed the interaction so far. I'm pretty much like a very independent person. I don't need to have a lot of social attention. I I can just do my own thing. And that's perfectly fine with me. None of this is commercialized, nothing cost anything here or anything like that. But it is nice to have people along on your same journey, thinking about the same things and kind of sharing your thoughts with them about those things because we can fill in some blind spots, right? As we think about these different charts, there's like some just kind of interesting ideas that we have along the way And as you start to see these different formations where you might buy in, do you see some type of, rounding patterns, which is very rare? Some people see that stuff easier than other people. And if you start noticing that type of rounding pattern, then you can also have an idea of where it might end. And that might suggest, that there's perhaps a new direction that might take off or something like that. And or you see these different triangles or these different these lines of support, and these trends upwards or the downtrends, whatnot. And it's just good to build a little bit of community and to get a little bit of feedback, in case there's something that I could improve on as well. Okay, let's go ahead and check out Bitcoin's CME chart since we're doing that. It looks like I haven't hidden my drawings. It's just kind of like my personal drawings. I didn't really mean to be showing this stuff. Some of these things are a little bit out there. I told you I like to be thinking outside of the box. So I do try to use like curves whenever possible, and I like to make these different little formations when I'm trading because it just helps me figure out entries, and potential exits and things like that. And so this is how I'm thinking when I'm trading, on my own. But it's not necessarily meant for a display, so sorry if that's a little bit messy. And likewise, this one, the CME charts. Usually, I just use it to kind of like test different concepts. I noticed that Bitcoin prints these wedges quite a bit that it breaks down from, and I just kind of noticed that we print a lot of them, on our way like tipping over, and we're printing one right now. Okay, we're printing one right now. And so, if we do break down, which kind of looks like we are, it's got that look to it. Don't be surprised if we then break down to perhaps this curve support. I told you I also like to think in curves. So you see how this rounding, I've called them like teardrops before, right? Like the teardrops on someone's face. But I don't think I drew them like this. I drew them like this for you guys, right? Like this. You see these teardrops? Like these different teardrops that you get like running down your face, crying as the market is bleeding to death, right? Just tears. Well, we're losing all of our money, right? But yeah, but actually, the rounding shape that I kind of prefer is this upward one, where we have this type of rising wedge, and then we break down from it, and then this just helps me understand where we would really kind of critically need to bounce from before bailing out. So essentially, where to target a stop loss, effectively. Um, and the reason for that, of course, is that this is a bearish formation. It looks bullish, but it's actually a bearish formation by the time you get to the end of it, right? Of course, that makes sense. This bullish ramp up, it has to end bearishly, right? There's no other option. It just can't go up forever. And so there's a point where it's going to break down, and it's often near the apex, right? It's like 70% up to like the apex, and then it breaks down. And of course, that uptrend, eventually will pinch off somehow. And so where you see this green area, that's where my stop loss is on this one if I don't catch it manually, right? The alternative is that we break to the upside and then keep going like that. It's just that these do tend to be bearish patterns, so more likely to break down. And what you can see here is that, while we could strictly use just these like diagonals, like these diagonal trend lines, again, guys, like you got to think your own way. Like you got to use your own brains for these things. You can't worry about if people think like your methods are right or wrong. Sorry if anybody is watching this and you think like how I trade is strange, but it works for me, right? And so, if we do have these uptrends, then, this line can kind of give you a little bit of signal that maybe that this diagonal would be completely useless to help you with, right? That this diagonal would be pretty much useless to help you with. And So there are other ways to be thinking than just like standard straight lines. And I just want to kind of put that out there. You have to have a little bit of an artist and you have to have a little bit of creativity in order to not just be thinking like just a basic trader. And what do I mean by that? Like if something's obvious to like the basic trader, right? Just like the average Joe, then probably the market is going to end up countering that somehow, right? Like it's not, not all of those perfect setups are going to work out. And so, sometimes there's something unusual going on because if it was too obvious, then everyone would be trading it. And so I look for the really kind of weird stuff that can be captured, which do tend to lead to very big moves, right? Like capturing this, even though it's kind of sloppy and kind of weird, capturing this was a very big move, right? If you had shorted that, it would have been an incredible move. And then, of course, we have this kind of diagonal down here, which would be kind of a trend line. And of course, we broke out of that. And maybe we come back to this area, right? Just kind of like a retesting it. That kind of lines up with our support. Maybe extend it upwards a bit, right? Somewhere around 21,000, let's say 500-ish, right? And we could come as low as there and just kind of like and bounce off of it because what we've shown is that by thinking out of the box here is that you can bounce off the teardrop, right? As you move to the upside on this teardrop, right? Bounce off the bottom, bounce off the bottom, bounce off the bottom of the teardrop. And no one else is going to show you this formation, right? They're too scared. They're too scared to think differently. They're too scared to do anything but like straight lines, right? And so these guys, like they're afraid, not to, hit every wick perfectly, but they're going to miss some of these concepts that are going to show you how the price is rolling to the upside, even though you can pretty much do it with horizontals and like different indicators. Some people use indicators, some people use, just standard formations, some people use EMAs, some people use fibs, some people use this or that. But again, like if you can see it in your mind's eye and you can set a standard for it, right? Like if it violates this, then I do that, right? If it conforms to this, then I do this, right? Like then you're still rules-based trading, and so you can make kind of your own style. Not really trying to hammer that point too hard if I'm going a little aggressive on it. It's just that it seems like everyone, like literally every channel that I've been listening to, every person that I've been listening to in the market, like they always have some type of criticism. And I'm like, gosh, guys, just like perfect your own trading. Like before you go on a rampage about like how other people are so bad and how the rest of the industry is so bad, like just fix your own trading first, like improve yourself. But yeah, so that's Bitcoin here. Of course, Bitcoin is not as bullishly positioned as Ethereum. We do see it breaking out of this kind of wedge. It is threatening to break down from this uptrend. We do have a little bit of a wick here, so I do consider us to have kind of a zone here. But if we break down below 22,000, let's say 350-ish on the CME chart, then perhaps, we could be testing, this support down here. Right now we've got this top, support that we're just hanging on to over here at the 22,000, 500-ish. But then we have like a layer down from that, approximately 21,500. And we don't want to break below that because we could end up losing this chart. And you see what happens when this formation loses that area. It can be a pretty scary drop, right? And so that could perhaps take us to, 16,500 if we do end up continue dropping, dropping down below this formation. You see what happens. You chop around a little bit on the teardrop, right? This is us crying, right? This is our teardrop. We're just crying because price is dropping. it chops down, and then that's like your signal, like get the heck out of the market because this thing's coming down, right? So hope you appreciate that perspective. Again, I'm not trying to like lecture anyone. I'm just trying to vent a little bit from all the criticism that comes in this industry. You kind of just have to close your ears and do your own thing. But you know, my way may not be perfect, and maybe I can feel a little bit guilty because I'm sharing it with others at the same time I hear criticisms. But in my mind, these things make sense. So hopefully you can use them in some small way, but always, of course, develop your own method and what works for you, as long as it's relevant to the actual price action, right? Let's go ahead and just check on some of these coins we've been talking about. ADA has just been pumping, so we got like we got a couple 10% moves on ADA. I mean, this one right here, right? This was the one that I mentioned, like it was going to probably check back to this wedge. Again, like one of these really silly formations that most people wouldn't even mark out just because they wouldn't even imagine like this line, to be honest. Like most people would be just too afraid to even draw that line because it's just not what they're taught to do. But I showed you how we can just pump. We can just pump, right? We can just pump off of that diagonal. And so that diagonal, in my mind, is really important to capture. And it got stuck below this diagonal, this kind of master diagonal up here, right? And so what happened is it wasn't able to do anything while the rest of the market was pumping, and it kept getting suppressed under that wedge. And when it got smacked down, and I guess Bitcoin probably had a pullback or something like that, so it got smacked down a little bit too hard. It lost this support, and then we've basically been waiting for it to find its way out. And what did it do? It had to fight this resistance level right here at 50 cents. It pushed through. It couldn't really close on top of there, so it broke back down as probably Bitcoin and Ethereum were having a little bit of pullbacks and things like that after having pumped so hard. And so it's kind of caught under that area of resistance. You see this wick right here lines up with this one right here. And so, of course, it just is getting like stuck in this zone. But the more times it tries, most likely it is going to be successful as long as Ethereum and Bitcoin can hold up on their chart. It should be able to push up, and then we're eventually going to get this move, which is a solid like wow, I'm even afraid to say it. It's like a 40% move, guys, right? Like a 35 to 40% move. So if Bitcoin and Ethereum hold, that's if, okay? Like ADA is not a leader by itself. You know, if Bitcoin and Ethereum can hold their bullishness, then we potentially have a 40% move on Cardano coming up, okay? And then it'll probably be rejected at the top of this box, sort of like Kadena in its box, like maybe once or twice, maybe even a bunch of times, who knows, right? Because this market is a little bit brutal. But there is also the possibility that it could like hit just 60 cents and start to chop around, or something like one of these little mid-channel areas, just like it's sort of getting stuck right here. Could get kind of stuck right there before moving on. So this thing has to fight this area before it has one of those power moves, and then when it gets outside of this box, then the game's on for like one of these check marks. You know what I mean? Like this thing could just go, right? But it does just have to battle its way out first. And so, guys, like you don't have to be chasing pumps in this market. There are a lot of coins which just haven't gone yet. And so, if you missed a pump, don't make the same mistake that I do sometimes because we're all human, which is chasing a pump. Just try to find something that hasn't really gone yet, but looks like it's putting in a pretty sincere effort to try to. And we know that ADA can pump, right? Like it had this pump right here just not too long ago, and that was a 50% pump. So we know that ADA can do it, right? It's just that ADA is a little bit suppressed right now. That's all. And let's see, what else do we have going on in this chart that maybe could be relevant. I guess we should mention that if it does get smacked back down, then of course that 48, 49 cent area is still kind of our support, kind of our little mid-channel, quarter-channel support. And probably we would hold up at 45 cents. But if we broke below 45 cents, then I would get a little bit worried about ADA. Okay, just personally, I'd get a little bit worried. And if we broke 43 cents, I would be pretty worried about ADA. Let's see, just going forward on some of these coins. Let's go ahead and look at Kadena. Kadena has been a little bit disappointing. It did what we wanted ADA to do, but it just has much less range. So let's see, this pump right here, which we did capture, was 15%. For ADA, that move would have been 40%, right? So I wish ADA had done what Kadena did. They have very similar setups in how they got kind of suppressed on their charts. But one thing that you can see different about ADA is that ADA is finally outside of these two wedges, right? So ADA has been freed. It's jailbroken, right? It's just trying to clear the overhead resistance right now, but it's jailbroken from those triangles. Whereas KDA, KDA is still being repressed underneath, these big kind of wedges that I've got drawn out here. And again, it's a little bit unorthodox to be drawing things this way, but there is relevancy, and it has respected that line. People might not believe it, right? Because it's just drawn in such a weird way. They'd never draw it that way. But if you can kind of see something in your eye, your mind's eye, often it can be right. And look at this. Look at this. It's literally just like gone up and down around that red line. You see where it's making those U-turns? Like up and down around that red line. And so, I drew this before it was making this formation. So this red line is no joke. It's literally wrapping around it like a snake, trying to figure out how to break through this red line, which has been incredibly powerful, right? You see it snaking here, right? Snaking around it right there. You see it snaking around it right here, right? And so this line has just been very powerful. And if we can get above it, then we could go, right? We could potentially go, right? So these big moves have come off of this red line right here. And so that's really what we want to capture. We want to sit on top of it. And we also want to hold our little mid channel here in our range, right? And then the next boss that we're going to have to defeat is some of these like little, headspace resistances over here. It's just going to probably chop around, kind of like ADA, maybe get rejected a couple times, pump back up, get rejected again. And then, we want to recapture this area. And then once it's free, once it's jailbroken like ADA, then it has permission to just go for it, right? Maybe into some of these kind of more insane levels like $2 or whatever, right? So there's just a bunch of levels where it could potentially, be take profit zones like $2, 230, 285. I'm not being specific here because we're not even pumping yet, right? But you can understand where the resistances are, especially if you see the little peaks on the chart, right? And the little bottoms on the chart. Just draw horizontal lines and figure out where you want to take your profit from. Depending on how bullish or bearish Ethereum and Bitcoin are, if they're looking really bullish, then maybe you want to just wait a little bit longer. Um, if they're looking kind of bearish, then you probably want to take your profits as soon as possible and as much as possible early on. My motto, the motto of this channel: always be taking your profits, always be selling. Don't leave these coins on the table, put food on your table. These coins do not care about you. They will not be loyal to you. They will not do anything for you by just hodling them. You want to take your profit. We are in the middle of a macro downtrend, Okay, like we have not we have not made an uptrend, not in a really sincere way, in a very long time. And so in a macro downtrend, you know, always be selling, always be taking your profits, because the next day it might be gone, right? If you're shorting, you're in a much better position. But if you're going long on anything, aggressively take your profits, guys. Let's see. And by the way, if we do get into little ranges like this, it's kind of a blessing. It's kind of a blessing, guys. Like you can short here, you can long here, you can long at the mid channel, right? You can short, long, short, long, short, long. I mean, look at this. It's a blessing. But of course, the mid channel can kind of confuse people. It can throw people off. So it's not always the smartest move to be trading from the middle of the chart. You guys know I've said that many, many times. But, if you do start to curve around, I mean, you can take a chance and have a stop loss if you want, depending on how much, risk you're willing to take on. Otherwise, you can just kind of enjoy these swings, right? And that's basically swing trading in a nutshell. It may take several days, it may even take several weeks to play out, but if you do have a nice little range, then go for it. But especially if it has like an upward diagonal to it, because then you're going with a trend, and that's always very nice. Or if it's to the downside, then maybe you're shorting primarily, right? But don't fight your trend. That's all. Because your trend is um, probably your friend in that situation. What's the expression? The trend is your friend until the end. Okay, Zilliqa is another one we've been watching here. It did continue to break down as I was suggesting. Looks like it got a little bit of bounce and is just breaking down again. I do think that it could come all the way down to 37 cents ish, right? Maybe 38 cents. So let's just see if it ends up coming down into this area or not. We do have this, a bit of this, uptrend right here where it could come down to here. And then this is a very dangerous area for Zilliqa if it does come down there. Well, that would be a good buying opportunity compared to having bought it up here, which I stupidly did. Um, we all make mistakes, right? And then, but the thing is that when you're in these areas, often Zilliqa just breaks down dramatically, right? So, be careful. It could go the next level down, right? Like this is also a downtrend. It's a very strong downtrend, in fact, also, right? You can look back here. It's a very, very strong downtrend. So Zilliqa is no friend of anyone going long right now. It is underperforming compared to a lot of other things on the chart. And it's basically, in essence, trying to catch a falling knife. But the reason why, people would want to catch that kind of falling knife is because of this like 250% pump, right? Before a little pullback. And then what was the next one? A 100% pump, right? So Zilliqa sometimes does this weird stuff. And as long as you're managing your risk, then some people are in these risky plays, but look, 130% off these type of you know even in these downtrends, right? Like Zilliqa sometimes does this 60%, and so if you can capture one, but you lost a couple percent because like me, you kind of FOMO'd in while it was going, thinking you might catch one of these things, right? Oh, brother, man, sometimes sometimes I make a boneheaded mistake, right? But anyway, not too big. That was less than like $50 loss on that one. But so if we get a better entry, I'll be glad to just re-enter there, and I'll probably make more money by having cut my losses than if I just stayed in it, stayed in a losing trade. So again, like sometimes I say things that just like new traders need to hear. I'm not really talking to the people who have a lot of experience. But just talking to new traders, it's okay to cut your losses, right? It's okay to make a mistake and to admit your mistake and then to cut your losses and to just move on from it, right? And maybe some of you can just afford to just hold on to something until it recovers. But just keep in mind that, like, with the economy very shaky, if you have any significant amount of money in any one trade, then if we do have a major downturn, all of this stuff can go 50% lower. Not only can it pump 50%, but it can crash 50%. It could go 80% lower. Okay, it doesn't matter that it's 80% down from its all-time high. Its all-time high is meaningless. The only thing that matters is the current price and how bad the economy can get, and then it can actually be cut down, according to the real economy. It's not going to be, or at least the stock market, right, which isn't really the real economy. But if the stock market takes like a tumble, then Bitcoin's going to, do 2 to 3x to the downside, whatever the stock market does. And then some of these altcoins are going to do 5x whatever Bitcoin is doing. And so, your altcoins are going to be moving like 15x the speed of the stock market to the downside, which is, it could get pretty frightening. So, if you are putting a significant amount of money in it, just to make sure that it's money that you can lose, and of course that you're using stop losses, and that you're using good risk management, where you have some type of reasonable ratio of the amount that you could lose versus the amount that you could gain, and that you have a certain percentage of winning trades, so that you're at least better than 50%. You're at least winning more than 50% of the time. And that way, even if you have like a 3-to-1 ratio on your risk to reward or whatever you set it as, that you will end up ahead. Just statistically, you'll end up ahead, uh, even though we all take losses from time to time, right? And that's just the name of the game, right? It's all statistics. It's not, no one can be perfect. If we look at USDT, dominance here, it's coming down. So I hope to revisit these areas like a 6.15 and maybe even 5.28. I hope that it just continues to come down. USDT continues to come down. Then of course it means that people are investing in crypto, right? I mean, they're either taking their USDT off the market, which is basically their dollars for crypto, right? They're either taking it off the market or they're putting it into crypto. So, most likely they're buying stuff with it, right? Let's go ahead and look at Bitcoin dominance. It is continuing to drop after a bit of a check back. And so that means your altcoins should be doing pretty good, right? Like you're probably making some money on altcoins. And the good thing is it checked its support newly as resistance. So who knows? Maybe it's going to continue to fall. It is kind of in a supportive area right now, but it could fall a little bit more. Let's see, right? Let's see. ETH should be pumping. Yeah, ETH is pumping. So ETH did have this. Let me turn log on. ETH did have this really nice channel that was carving out on its dominance, right? The percentage of the market that it owns, the percentage of the crypto market that belongs to ETH. Like, it just kept gaining quite regularly. And I love this channel that I marked out here. Like, this is another one of my little unorthodox channels. Like, most people don't draw stuff like this. Maybe they'll be drawing a broadening wedge again or something like that, right? But for me, this makes more sense. And then when ETH did break down, I wasn't really surprised by that, right? Um, and then the fact that it's checking back, I'm not surprised by that either. Now, the question is it going to be able to regain this level? Which, if we think about ETH strategically, like the ETH people, they may be trying to regain this level so that they can get back into this dominance game where ETH continues to gain against Bitcoin and other cryptos, right? Like, this may be what they're going for. That may be the push on ETH. They want to get back in this dominance game. But if ETH is dropping, obviously it's suffering in the market compared to other altcoins like Sol or Solana or whatever else. And so, is ETH going to be that 800-pound gorilla in the room, or is it going to give market space to other layer ones? So this is the fight right now, right? This is the fight for the ETH dominance, and so far it looks like it's making a brilliant recovery, but it does have a little ways to go to recapture this zone. But that also suggests that if these ETH bulls are sincere, then maybe there's 1/3 of the push left to go. You know what I mean? Like they might have to like pump this thing up in order to really secure that area, and so ETH could potentially go like to that $2,000 that I was talking about, and that could just carry the rest of the market with it while these ETH bulls just push ETH back into this channel. Now, the risk here is that if ETH gets rejected, and if the bears say, "Sorry, we already broke down," like you don't get two chances, like you already broke down, like you got to go sideways for a while, right? Or you get a lower high or something, then it could get potentially very ugly for ETH. ETH might check back to its lows and then try again, right? Something like that. So you can use this kind of chart to kind of imagine, the great battle that's going on with ETH, and hopefully that helps you visualize why ETH's chart looks like it does. And again, this is ETH's dominance, the percentage of the market that ETH owns. It's not ETH's price. So again, we can just compare it with ETH's price really quick, and this is the ETH chart. Okay, so you can see there it is trying to recover, and why don't these charts look the same? Well, they sort of do. They sort of do, right? Like you can see like ETH's going up, but the reason is just because Bitcoin sometimes has a lot more share, or other altcoins sometimes are a lot more popular. Like Luna was popular for a while. It could take a lot of the market share, and so of course these two charts are going to look different. The price of the coin and the market share, because other coins could also be increasing or decreasing in price at any one time. And of course, I'm trying not to use the log chart as often. I'm trying to use just the regular linear chart. I do find that it's a little bit it's a little bit more consistent, but of course, over those great time periods, the log chart really does help you to see the big moves, right? Like I knew ETH was going to break down when I saw that ETH puts in these type of like rising teardrops, right? And basically I called them spoons at the time. You can see like these kind of like ladles, right? And ETH was putting in basically a ladle here. And so, I had drawn an arrow, and I basically called the bottom of ETH using this method of just visualizing this kind of weird, stupid stuff. And again, like sometimes it's just intuitive. I mean, you need rules-based trading, but sometimes, being a little bit artistic and being a little bit intuitive and thinking outside of the box, it can just give you a little bit more of an edge. So, try to think about what you're doing. Don't just behave mechanically, because the bots will win. The bots and the algorithms will win. You can't do better than that. We've gone over several altcoins. We've gone over Bitcoin, Ethereum, Ethereum's CME chart, and also Bitcoin's CME chart. So I think that's pretty good. Just briefly checking on the dollar. Dollar still struggling. Not sure if it's putting in support, or if it's going to continue to go down or going to continue to go up. It's just kind of hanging out there with an indecision candle. And let's see, volatility continues to go down, which is good. That's in our favor, but it does look like it's approaching a limit where it might just pop up soon. It could be around that time of the Federal Reserve. That could potentially be bad. So just watch out for that. And we already checked USDT. So going to wrap it up there. All right, guys, that was your alpha for the day. Stay safe and happy trading.